And good afternoon. I'm Michael Filigera. I'm with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, June 6th, 2021. Well, where we left off on Friday, my initial thoughts were that the market would need to put in probably one additional new low before it then turned higher. And what I had described had to been a very quick move to get us back towards 13,800. We did not make the additional new low, so we can almost put together that the market failed, or the NQ failed to make the new low. So that particular C wave and then the minute wave 2, which has been the corrective phase, would have ended there. I'm allowing it to end at that low, and which really doesn't change the necessity of what we saw. So if I move it over and put it where the failure is, then that's fine. It wasn't that large, and the market did blast right off that level, pretty much from Friday's opening, and that lasted all day, for the better part of the day, I should say. I think there was one little down leg here in, no, it actually was during Goldbex. So take it back. Pretty much from the opening on Friday, the market went straight up. And all the moving averages were in alignment. And you can see this is the hourly chart, and they remain in alignment, which is, again, a positive for tomorrow. That's based on an hourly chart, which is not what I would trade off of. But this uptrend is exactly what we were looking for to launch, number one, the minute third wave advance. And again, just to kind of review the larger picture, we continue to be in a minute 5-wave advance to complete minor wave 5. And within that, you see here's minor 4. So within that, here's the first wave here. So that's minute 1 of minor 5. And we just finished minute 2, so we're in a third wave. And the third wave really needs to launch in the manner of being a third, which is just like going in the direction of the trend it's going, and that it just blasts. It picks up speed, it picks up power and moving higher, so people will be coming back in. Now, that's kind of what the personality would look like. What actually happens, we'll wait and see. It could be the market moves up on thin volume and it just more buyers and sellers, who knows? But my expectations were here is that we start to continue to move higher and we get up to our next resistance areas. And in fact, being that it's a third wave, it continues to be related to wave 1. And the first applicable level would be where this third wave would be equal in length to the first wave. And that comes in at 14,286.50. And in reality, a third wave would be more likely to come all the way up to here, but that's pretty high. That's 14,796, so that's almost 14,800. And from this level, that's 1,000 points. And with what we've just gone through of this lackadaisical, not going to go down, not going to go up pattern, albeit corrective, the market has a lot of proving that its intent is to just kind of start blasting through these levels and heading up towards new highs, which at this point is nothing more than breaking about 14,064. And I should not include nothing more, because it's at this risk, it's going to take, I think, a lot of push, a lot of oomph to convince the sellers to step aside and get higher prices. But that is going to be my expectations. So now I'm going to close this back up so we can take a look. And let's go down to the 30-minute chart so we can determine whether we really have now completed, and again, I'm going to put the failure mark here. So this would be our start of that wave, and that would be like probably 1, 2, or this could be 1, 2, and then we get another 1, 2, and 3, 4, 5, a 3, and then we still maybe are in a little fourth wave correction within this, it's a 30, let me go down to the 15, within this initial first wave up. So I would think that we're going to now find some support if indeed we're going to launch again higher without putting a little bit larger, which I don't see just yet. We would probably come down at least equal 13,756, which was where the market closed on Friday. And probably even a little bit lower, because we're going to just finish this little correction. Now, I'm probably would not be expecting something like this, but again, fresh day, fresh market, fresh orders could push that issue. Or in other words, we could see the volume that just takes it, back up above. But I'm truly just looking for above 13,800. That's an achievable level and fits the picture cleanly, because we really don't have next resistance until 13,874. That may be where the market finally ends up to complete possibly the first wave of this new third wave, which is going to be a 5-wave sequence in and of itself, or whether whether we're going to finish just the third wave there, and maybe the first wave finishes there. Okay, enough said for upside. So the bottom line on all of that remains that please keep an eye on your moving averages, because your moving averages are going to tell the story of how high we're going to go. If everything remains in alignment and are all pointing higher, that is very, very convincing that that's what's going to happen. The trend continues, and the buyers are the ones in control of this at the moment, so that they come back in. And also tomorrow is additional, start of the new month, we get a lot of that new money that gets transferred over from 401ks, IRAs, whatever the situation might be, and they're investing the money. So yeah, we could see buyers, and yep, they could push. And if it's then, it's going to push even harder. Downside, I think, is going to be limited to just right around that 13,761. I really would not anticipate that we go too much further, but I can run some quick Fibonacci just so we can put some parameters around if the market continues to turn lower, and then where we would want to be looking for something different. So in other words, it's like, oh, we're not going to rally right now. We're really going to begin to drop, and it's not going to be pretty. So let me just put this in line. Okay, we'll choose right there. Right there. Thank you. So in essence, you can see that just on the rally that we've had off of the low that completed the last little correction we were in, then these would be the parameters. So if this indeed did complete that first wave up, and we're going to get a wave 2, then yes, we're looking at the possibility that the market drops back and can drop back 382, drop back to 50. And that's going to feel like they're taking it all back. So in your, as we're trading it, if that's what occurs and you're trading it, it's gonna run through my mind. Oh, are they going to take this all back as quickly as they put it on? And that's always a possibility. In that case, we've got to pay attention to these lower levels, because when they start to break below that, then it's something else. And this market has been very difficult. I'll give us all that. But if we continue to trade what's in front of us, that difficulty turns into monetization, and we do well. But we may have to then stand back and look to see, well, if the buyers aren't going to take over and the sellers do, what does that forecast for us? If they're going to step in and take over for an extended period of time, what does that suggest for us? Other than great trading, because as it moves down, we'll trade it. But what can we look forward to? In other words, it's like, where are we going to get the direction, and how long should it last type of a thing? Because lately it's just been one day it looks good, the next day it looks this, the next day, so it's very skittish. And it's just bouncing itself around. We did get a little bit of a breakout that we were looking for. So that continues to allow me to put a little bit more support towards we should continue higher. Doesn't mean they're going to come in tomorrow and go like, Michael, we agree with you. And away we go. So let's allow for both. We have upside. Now we're putting in downside, and you can see what I've done. The first one was Fibonacci extensions down to, well, actually, I'd move that over now. So those upside numbers would change a little bit. But I'm looking at top of wave 1 down to the bottom of wave 2, and I need to just move that over, which is not all that much different at the moment. But to make it accurate to the T, I would move that over. So your ups are going to change just a little bit. And then we have our downside, which was the Fibonacci retracements of what we would count as wave 1, if indeed that's where it ends. Okay, so we have it all. Downside, maybe if it gets limited to right here, then I'm going to look for an additional high above that and a break above 13,800 before I get our next a little bit bigger correction. If this did complete the first 5 up, then this is what I'm going to look for. Possible run down to 13,708, 709, down to 13,700. And then we come down to a midpoint, 13,660. I'm going to say, you know, you're going to have a window that could maybe take you down to 13,620, et cetera, et cetera. So, but you've got your points, and your moving averages are going to guide that on the way. So we're going to move from maybe our 15-minute look at the hourly moving averages, et cetera. Okay, that's where I'm going to leave it. I'm going to hope everybody has a really good trading day tomorrow, and the next update will be Monday, June 7th.